is some exciting news that we have. And that's going to be that we have a retreat coming up in Florida. It's just in 2 months, 2 months away. But it's really important that if you guys do want to come, that you register before December 12th. The hotel we're staying at is going to be raising the rates after that. I wish I could keep it, totally discounted just up until the retreat, but unfortunately prices do jump because the hotel will increase rates. So please, everyone, if you are interested in coming, let me know if you have any questions, and go ahead and sign up. I'll post a link in the description of this video. The next thing I want to talk about real briefly here is our new tax services. Now, just to be clear, our tax services is completely separate from KF Investing. It's not, it's a totally different company, but we do offer you some benefits if you are a KF Investing member. We'll offer you some discounted quotes. You can get a completely free quote by heading to our website, kaftax.com, KAFTAX.com. Even if you have a CPA, please give us a shot. We have hired an incredible CPA, and since this is only our first year in business, we are going to be doing people's taxes for literally a fraction of the cost with the same incredible, elite private firm-esque type results. We're just, like a new tax firm trying to build a client base. Seriously, we'll do your taxes for dirt cheap while giving you all the perks and benefits of, the highest quality tax services that are out there. Okay, let's move on and actually get into what I really want to talk about here today, the exciting stuff. And let's talk about shorting the markets. Okay, the biggest opportunities to make money in our markets are during sell-offs, right? That may sound backwards. If you have questions or confused how the heck you make money when the market goes down, be sure to watch my video called Shorting the Market. I'll post that link here in the description of this video as well. So now, with that in mind, what exactly is a market sell-off? All right, this is kind of elementary, I know, but a market sell-off is basically when fear takes over the markets, okay, and it leads to panic selling. Here on the left, we have, imagine these doors being the markets, okay? People come into the markets, they go out of the markets. It's a very smooth process. Buyers come in, they buy stocks, then sellers exit. It's very smooth, okay? In and out, a nice influx, nice stable markets. Well, here on the right, this is a nice picture of a Black Friday shopping little incident here. This is what it looks like during a market sell-off. Everyone is trying to go the exact same direction at the exact same time, and people are literally stomping and pushing each other on the way out of markets. Okay, we call that panic selling. All right, so next time you go Black Friday shopping, just imagine you're sitting waiting at that door. That's what it's like during a market sell-off, except it's virtual and everyone is, traders at home on their computers trading these stocks. Okay, now with that kind of cheesy picture in your mind, let's give some more realistic examples. This is the Dow Jones Industrial Average. Okay, this is Dow Jones Index. Notice these areas that I have highlighted in gray. These are all significant sell-offs, right? And this is just in the last year. Okay, this is in the last 12 months is all. This is year to date. We have the biggest one being this one right here. This was the February 5th flash crash, what I like to call it. Huge sell-off. And then in more recent months, this is just within the last 2 months or so, we have had 2 or 3 major sell-offs. And this chart is actually a couple days old. The majority of sell-offs, we had another huge sell-off just yesterday, just a couple days ago as well. And so this is what it looks like from a chart standpoint. Okay, these gray areas are sell-offs. And you could highlight probably a couple more areas. Look at that gap down there. This was a pretty nasty sell-off. So that's kind of what it's going to look like on a chart. So how the heck do we make money off of it? Let's go ahead and dig in a little bit more to that. So I like to call it the perfect storm. Okay, now storms, you typically think they're bad. Storms come in, they ruin things, right? A big tsunami, a tornado, however you want to think of it. And that's true. Well, imagine if a tornado came through your city and you were somehow able to short your city, right? That's kind of what we're doing. That's kind of what we're doing in a way with the markets. A tornado is coming into the markets, we're shorting the markets in order to profit off of them, okay? Now, the first thing I want to talk about is sell-off catalyst, okay? Tell me if a couple of these things ring a bell that we've heard. Trade wars. Have we heard that in the news recently? Yes. Political uncertainty? Absolutely. Think of what's happening with Brexit and all these things across the world. Our own president is gets threats of impeachment basically every other day. There's a huge collusion scandal, Russia, etc. And what about this one? Rising interest rates. Have you heard this one? Yes, we have. We've heard all 3 of these things very frequently in the last couple months. Well, there's a new one that's starting to surface a little bit, and that's a weakening economy. We're starting to get banks to downgrade the overall market's price targets for the next year and things. JP Morgan, Bank of America, all these things. People are starting to fear. Now, how I say weakening economy, let me be clear. Our economy is actually incredibly strong. More jobs than in decades. There's records for how low the unemployment rate is. So please don't misunderstand me. I'm not saying that there's people are having problems finding jobs and things like that. But rather, instead of weakening economy, this really should say a topping economy or a plateauing economy. Okay, job creation, it comes to an end at some point, right? It's not realistic, and it's actually impossible that every person in this nation is employed. And when that happens, that's when things like inflation enter in, and more kind of worrisome things. All right, so take a look at some of these headlines. Here's some catalysts. Okay, these are headlines that we've seen within just the last couple days. Okay, yield curve, that has to do with interest rates. Big money investors, that's institutional funds, institutional holders, hedge funds, and things pulling money out of the markets. This is one in red here is an example of some political uncertainty. Oil has been insanely volatile the last couple months. Oil is a huge kind of keystone to our markets, and the volatility within oil has been insane. We talked about jobs reports. Jobs reports came out last week, and they were not good. They were not as good as expected, and that kind of goes towards what I was just talking about, plateauing and somewhat topping labor market. Okay, and here's another example of some political uncertainty in our news. So there's plenty of catalysts. We have the catalyst, okay, but it takes more than that if we're going to get a serious sell-off and one that we can profit from. It takes more than this. Yes, these are all kind of looming, but let's dig a little bit more into some other things. Remember, I said it's going to require the perfect storm. So what else happens in these sell-offs? Well, next I want to talk about the VIX, also known as the fear scale. Okay, this is this is like kind of VIX scale for dummies right here. Some very, very plain, simple ways to read the VIX. Okay, the VIX, as we've talked about before, is basically an instrument designed to gauge fear within the markets. There's a direct correlation with fear and market sell-offs. All right. The market will not crash and sell off unless the VIX gives us warnings. Well, as a very general rule, and again, we could get in detail and talk so much more about the tiny details of things, but as a general rule, when the VIX is trading over $20, our markets are in a high risk environment, meaning that volatility is excessive, that volume and volatility is excessive, and that our markets are much more prone to a potential sell-off or a market crash. Now, when the VIX is under $20, it's certainly not invincible, right? I mean, there could happen, a spike could happen in the VIX at any moment. But when the VIX is under $20, our market conditions tend to be much more stable. If you take a look at here, this was in the middle of 2018 here when the markets were making the climb back after the February 5th clash, all really quite stable. And then this, of course, was the February 5th flash crash. This single spike alone in the VIX wiped out so many hedge funds. I mean, we're talking billions and billions of dollars were wiped out in this single volatility spike from the VIX. All right, so that's the second part. First one is catalyst, looming catalyst, like we talked about on the last slide. Second one is the VIX. What is the VIX telling us? Okay. Next one I want to talk about is technical levels. Now, this is a real basic example. I'm going to get much more detailed about technical levels at the end of this presentation, and I'm going to be talking about our current markets and what I think will be happening over the next couple of months. So please watch this to the end. But this is an example of last week when I alerted what we call a code red in our trading room. And that means short, hard, short everything you can, basically. Okay. And this is a great example of a technical breakdown. Now, if you're just looking at this level, this is the Dow Jones. Sorry, this is the Dow Jones. If you're looking at this, but none of the other things are there, if the VIX isn't trading above 20 and if the VIX isn't active, then this means nothing. If the catalyst, the overwhelming market catalysts aren't there, then this breakdown means nothing as well. But because we had the perfect mixture of VIX volatility, of news catalysts within the markets, this technical breakdown here was the perfect setup for us to go code red on. And the market ended up losing 800 points roughly this day. The Dow Jones lost 800 points, which is like 3.5%. It was huge. It was gigantic. All right. And I alerted the code red literally within a minute of this breakdown. And it ended up being a huge day for us because we got short and made some big money to the downside. I think I made $6,000 or $7,000 that day roughly. Okay. Because we were all over this. Now, again, this breakdown does not happen unless the volatility and the catalyst are there. And there's one more thing that kind of goes in with that I want to talk about, and that is momentum. Okay. Now, The thing with momentum, and I want to talk about selling momentum here, it's all about the volume. Okay, what kind of flush are we getting under these breakdowns? And I wish I would have had the volume. I meant to have the volume charts here and bring up a couple stocks. But the volume flush that happened on this breakdown was huge relative to the earlier morning action. Volume was really steady, and then right when we got this breakdown, there was a huge volume spike. I mean, huge. We're talking like 10, 11 times what it was throughout the morning. The volume crack, and that was midday. Volume shouldn't be spiking midday like that, but that tells you a lot of people were very scared of this technical breakdown. So volume is the next thing that we need to look at very carefully. Okay, so it comes down to the perfect storm: catalyst, fear index, technicals, and momentum and volume. Okay, that's what leads to us being able to capture the perfect breakdown, the perfect flush. Okay, we call this a nice flush. All right, and volume is needed for a real clean and strong flush. Okay, so that's just kind of some basic things to remember. Those four, it's kind of like the recipe for the perfect storm for a significant stock market crash. Now, this isn't a market crash. I mean, that term is thrown around so much, but this was this was a 3% drop from the Dow. That's huge. That's a crashing market, right? That's very significant. Okay, we're going to talk more about stock market crash in just a second, but first, I want to show you guys this chart from today. Now, this looks probably just crazy to you, but let's walk through it a little bit. This is Netflix today. Our markets are insane right now, and they're not following, typical levels that they have followed recently. Okay, there's been so many fake outs here, fake breakdowns there that are trapping bulls and bears all at the same time. And you might think, oh, well, if bulls are losing money, then bears are making money. That's not the case when charts look like this. And when they trade so weirdly with overall markets, people are really getting crushed. People are losing money significantly on both sides of these markets, and that's because of this chart. If you want to take a longer look, go ahead, pause the video, watch this chart. Take a look at this chart a little bit better. There were so many fake out breakouts and breakdowns today. That's Netflix, and that's what you get in crazy volatile markets. Okay, now. I'm going back to the slide I showed you a second ago because I want to show you how Netflix reacted. This is Netflix on that same day that I alerted the code red. Now notice it's a little bit different, right? I mean, Netflix did not tank straight down as quite as heavily as the markets do. But this is just to give you an idea. When I alerted the code red on the markets, I got short on Netflix, I got short on Apple, I got short on Amazon, I got short on a lot of those big time blue chip names that follow the markets very closely. Okay, so knowing what to short, that's kind of an indicator there. I want to short market leaders. When the markets are getting crushed like this, it's names like Netflix here that are leading that decline. Netflix, Apple, Amazon, right? All those big names. Microsoft, those are especially, in regard to tech specifically, you can get a lot more broad, talk about financials and things as they pertain to the Dow, but those are the instruments that I use when I'm shorting the markets. Netflix. Also, I went long on TVIX here. We talked about that a whole bunch. I talked about that in many of my other videos, so I won't get into detail about that. But just want to show you the correlation here and how closely that follows the overall markets. Okay, next, let's go ahead and talk about, this is my spooky. This is the spooky part of our presentation here this evening. Okay, I want to talk about the 2008 crash, the crash back in 2008. Okay, the Dow Jones Industrial Average high back in 2007 was 14,198 points. Well, the low of the housing crisis, it was 6,470 points. That is a 55% market crash. Okay, markets they lost 55% of their value in a matter of a year, and it was kind of a slow sell-off. I mean, this took a while. This was like a 15, 16 month recession we were in before we finally got some green to come back into markets. It got bad, then it got worse, then it got terrible, then it got even worse somehow. It just kept getting worse, worse, and worse. People were calling for bottoms here, they were calling for bottoms here, calling for bottoms here, and the market just continued to fall and fall and fall, and people were devastated. It was a full-blown recession. So many people lost their jobs. I'm sure every single one of you knows exactly what it felt like to be in a working environment in 2008. It affected everyone across the board. Okay, now let's talk about today. Okay, we made highs 3 months ago. All-time highs, the Dow hit 26,952. Okay, now first thing I want to talk about is it's cool to see how resilient our markets are. Yes, markets lost 55%, but guess what? Now they're up 80% from 2007 highs. and they're up 300% from lows. So, don't think I'm a big market bear and think that everything's, going down the tubes and that everything's just screwed, right? I don't think that. I'm actually very optimistic about markets. However, talking about, over the next couple months, I'm not overly optimistic. I'm going to tell you why here. So just to put in perspective, if our markets were to lose 55% off of their highs like they did in 2008, the Dow would be trading all the way back down here in the middle where it was in the 2007 crash. Okay, just imagine that. Imagine if our markets crashed like this. Okay, it's not impossible. I'm not going to say it's going to happen. I'm not all going to say that. People argue that certain monetary policy and different fiscal policy and things are put in place so that this won't happen again. And I agree. I do think there's some good steps have been made, but nothing is immune to potential sell-offs and crashes. Okay. And as I'm going to show you in these next couple slides, I am a little bit worried. Again, I'm not calling for a 55% stock market crash, but I am a little bit worried about the coming months, and here is why. Okay. Now, this is the Dow Jones, same chart I just showed you, but we're just looking at the year 2018. Okay. This all in here is the year of 2018. All right. Now, today something really uniquely happened. A lot of people were actually bullish about today. They're like, hey, this is such a good thing because we got a doji. Do you see this? This is what they call a doji, which means it sells off, but then it picks up a whole bunch, and they call it a doji. So people are like, oh, this is so bullish. Markets are going to bounce. Okay. But so many people are underestimating the fact that we made new 7-month lows today. This is today. This is today's chart. We made new 7-month lows. Do you see this crack here? Again, it's great. It got bought up. Yes, wonderful, awesome, great. We have a doji. But people are totally overlooking this fact that this level of support at 24,000 level fell through like nothing, like a hot knife through butter. I mean, 24,000 didn't even put up a fight, really. I mean, it sunk right through that level, and that scared me. That is really terrifying to me, okay? Now, moving forward, let's zoom in a little bit closer again here, and I want to kind of give a little bit of an opinion of what I think will happen over the next couple of days. I don't do this often because as day traders, we need to focus on intraday action, right? And I still strongly believe that. I'm a strong, firm believer of that. However, knowing what overall market sentiment is will give you a huge advantage in terms of what way you want to lean towards. All right. And as you've noticed in recent weeks, I have definitely been leaning towards being more bearish and taking more risk bearish. Now, these markets have been insane. They've been crazy volatile and jumpy. So it's been hard to trade regardless. But I want to talk about what I anticipate to happen here. So this is where we got the new break to 3-month lows. Well, this is what I'm calling for. I'm calling for a bounce to this upper trend line. Okay. Now, notice this trend line. It's a pretty clean trend line. This is all-time highs on the Dow Jones just 3 months ago, 2-3 months ago. Here's a nice bounce attempt a month ago, got denied within that trend line. And then, just a couple days ago, we got another very clean denial at that exact same trend line. So this trend line is now a 3-point trend line. And what I mean by that is that can be bullish or bearish. In this case, it's bearish. It's a 3-point trend line, and the fact that it's gotten denied very cleanly in 3 separate ways. Now, on the bottom side, there's really no trend line, right? It's free, it's moving, it's falling under levels of support, which tells me that the levels of support are very liquid. There's nothing solid. Whereas in terms of resistance, this is a very solid level of resistance. Okay, I'm anticipating in probably over the next 2-3 weeks that we do get a bounce up to this exact trend line before we come down and start to really get into some bear territory. I'm going to go back here to kind of continue to show you what I think. I think we fall under year lows, which is way down here at the 23,000 level on the Dow. To go back even again, this is that basically 23,000. I think we fall well under these lows, and I would not be surprised to see retrace all the way back to the 2,000 level, which in my opinion is kind of a gap fill. If you take a look at this rip here, I mean, the markets just went berserk. This is a gap. In my opinion, this is a gap that was created by total overextension and greed and panic buying in the end of 2017 that needs to desperately be filled for the overall health of our markets. So I do anticipate that in the coming months, the Dow will actually pull all the way back and test the 2,000 level. Now, how does that affect us? Well, it affects me in my long-term holds because I have repositioned my long-term holds to prepare for this and to be hedged for this. Okay, my long-term holds are up 11% on the year, which is fantastic considering the markets are down, 2% or so overall on the year. So I encourage you to prepare for your just prepare. I'm not saying sell everything, market's going to crash, it's over. And truthfully, if you're a long-term investor, the Dow pulls back to 2,000. Who cares? It doesn't matter if you're going to retire in another 15 years, 20 years, even 5 years. It's really not that significant of a pullback. But short term, over the next 12, maybe even 18 months, I think that this is very possibly a level that we can retest. So again, I'm an optimist overall when it comes to markets. Long term, your money is being in markets. Short term, be aware of how this will affect your day trading. Okay, be aware that this is going to present a lot of opportunities for us to day trade. So that wraps up what I want to talk about here tonight. And I want to just highlight these opportunities, the 4 things that we look for. Let me actually go back here. I just want to talk about them again. The signs that we're looking for, the perfect storm here to take advantage of a setup like this. Okay, remember, if only one of these, if this is just a chart breakdown under support, it means nothing if there's not those catalysts, if the volatility index is spiking, and if there's not a volume flush in the markets. You need all 4 of these, and that's when I alert code reds. Okay, I think I've alerted maybe 2, maybe 3 of them ever, and they've all been within the last month. And they're rare opportunities, but they're great opportunities to make money if you're a day trader and if you're shorting.